guys, and glad to have you on board again today. FAANGman has managed to give us the earnings release, and it is a pretty much mixed bag in there. Some of the earnings are quite high actually, and the numbers are staggering obviously. Some others are fairly more disappointing. Not to get into too much detail because that's not the perspective we're doing here. I'm just going to give you quite a few informations on how to properly read an earning release. So first and foremost, just don't give a shit about the analyst forecasts and stuff like that. Generally, like 80% of the times recently, markets always beat expectations. So what the fuck is wrong with expectations? That's the actual question you might wonder. Actually, rather more than how much are we going to beat the consensus, and rather whether or not the stock has to be performing regarding the fact that we beat the consensus or not. This is totally stupid. Very, very stupid. If 80% of stocks are beating the consensus, that simply means the consensus is going wrong. So is this something that has been done in purpose for years? I start to say we're going into dangerous territories, even though I have my personal feeling regarding this. The real information is, why do you even care? It's not something that matters. If forecasts are 80% wrong, then why do you even give a shit about them? It's really all about either you think they're just bullshit or you actually don't care. So don't care. That's actually the right thing to do out there. If you truly want to analyze an earnings release, the first thing you do is to compare what's comparable. So you take the numbers you get, and what do you think is the only thing it can be compared to? The first thing that can come across your mind. The first thing is to compare it to the previous quarter, to the same quarter last year, because some companies might have some cyclical aspect, which means they're making most of their profits in one specific quarter rather than another. And in that perspective, you really want to be comparing to things that can be matching. So at least making sure that you compare to same quarters. So that's what we call the year-to-year basis. So we're basically comparing second quarter to second quarters of 2019. And in that perspective, we can see that some of the earnings release have been showing quite some improvements in terms of revenues. Some others are actually contracting. If you have a look at Google, Google is actually making less revenues than a year ago, which is not very good sign. It's actually a pretty bad earnings release in that perspective. But the second thing you are going to get to analyze right after this is to see the natural growth of revenue. How much has it been growing from a year ago? It's simple as that, right? You take the new number divided by the previous one and you get the growth approximately. So you take an example in here, Apple is 11% growth increase year to year, but the asset price, the stock price, has surged first to 86% since then. We're 86% higher than we were a year ago when we published the same earnings release. Price were already staggeringly high back then. So what the fuck is going wrong? 10%. 86. We're not talking about 10% versus 25. We're talking about multiplying by 8 fucking times the actual earnings growth. So there is obviously not just growth in that perspective. There are just far more stuff going on. We need to get deeper into the earnings to get to understand what actually is at play. There are some several factors, but there is actually no one factor on the earth that can actually explain making 8 fucking times the revenue increase. It is nothing nearly close to possible. So in this perspective, there's only one answer to this question. What the fuck is going there? Bubble. It's pure and simply. People are paying fairly expensive stock prices for something that actually doesn't really make a lot more revenues than it did before. So stock price is totally decorrelated from reality. Sometimes you can find some true reasons that can explain, or at least partially explain that. That's not the case when it's like 8 fucking times. So you can dig into earnings into Apple. I really, really challenge you to find something that explains what the fuck is going on in here. So it's just all about how long is it going to sustain? When this thing will pop, it's not going to be pretty, obviously. But that's not what necessarily we're going to be talking about today. But the problem is, once and again, the problem is that these stocks are weighting so big into stock indices that they're fucking up the way we can trade them. That's been the problem over the latest few weeks and months, and apparently it's going to keep on going. I'm desperately waiting for this game to terminate because it's damn fucking boring and I cannot work in these conditions, but that's the reality we live in. I would like this thing to change, but I cannot necessarily make them change. And The reason is, actually, yesterday kind of proved me wrong one more time. Apparently, we're there and we're going to be playing this game one more time. So yesterday's earnings was kind of an interesting timing for me. Truth is, actually, it turns out not to be. So the next one is going to be, I don't know, whether something unexpected will come and fuck it all up, or eventually just waiting for the US election to actually start 100%, getting into debates and stuff like that, heading into re-elections, or I think most importantly, changing this motherfucking president and put him out of office. That hopefully will give us some volatility and will put us back to some normal market behavior after 4 years of stratospheric trading, historical political implications in the markets, historical whatever. It has been historical for everything. It was just totally crazy fucking stupid. Anyway, let's move to something else. Let's not go down the political way. There are lots of things I want to talk about today. So these earnings, yes, we could go down this road, but it's going to take a lot more time, and we want to keep those things as short as possible. And anyway, so volatility is low once again. The problem is that those FANG stocks, even though they're just 5 stocks, they've been skyrocketing indices. They're waiting so much. Yes, okay, we know the problem. The problem is that anyway, we're now breaking supports on volatility. At least I expect this to happen. And as long as we break this rock bottom of 24, I don't know what the fuck we're doing below there. And as long as we stay there, I'm unfortunately not going to be able to trade. So I'm waiting for the next 48 hours before actually deciding whether or not I'm going to post those podcasts, because I will totally be just out of job. I would just be partially jobless, just like so many people in the US, because basically I can't trade without volatility. So if volatility maintains itself below those levels, I think I'm not going to be able to trade unless trading 1 or 3 minute chart signals, things that I don't really have enough time to do right now. So I'll see if that's manageable in any way, or eventually go back for a few scalps in a day at the open sessions and stuff like that. But we'll get to talk about it right on time. There's just an announcement I'd like to make. So regarding the low volatility levels, I think the most rational and fair choice I could have to be doing to you is, I think, extending the free period of indicators right up to 1st of September. So I always said that I will give you a warning sign like 1 month prior, expecting to return back to subscriptions for the indicators, and I gave you basically that warning like 22nd of June or something like that, saying that starting from at least the 22nd of July, I'll think and consider eventually putting the indicators back into subscription. That never has been on a day-to-day basis saying, all right, the 22nd is definitely the day I'll reinstate this thing. Actually, it isn't. We already passed that day, and the indicators are still free to use. So I'm just extending this period to the 1st of September. So you can at least be sure that from now until the 1st of September, subscriptions will be totally free, and you can just get into the website, sign up, and get access for free. So that's what it is, all right? And it's not 100% sure that I'm going to reactivate on September. It's just that I think it's the fair choice to say not enough volatility. I might eventually shut down services again, not because I want to, just because I have no choice. And if that's the case, I certainly just want to be fair with you guys, and I think that's the fairest thing to do. Anyway, now that being said, already 9 minutes in, we're going to be late today, obviously more than 15 minutes down the corner, definitely going to be. So let's switch to the charts right now. All right, so if we have a look at correlations first, we're going to notice one important thing. Once again, we're getting at decorrelating 2 words, 2 visions of the future going out there. You can see, obviously, FAANGman is going to surge. You're not going to see it because it has been done after market. All right, so you're going to see them, bam, fucking up all up. Later on, the NASDAQ is obviously there to show it to you. So NASDAQ is back once again at leading the market. Totally opposite direction for other stocks. Europe is pulling back very violently. Nikkei is breaking support and keep on doing it. Everyone is kind of going really, really not well at the moment, but the US stock market. And thanks to just a few values. That's really staggering. Never seen that in the entire history, so much concentration in just a few stocks. That's very dangerous and obviously a lot of antitrust issues down the road, but those problems are to be dealt whenever they would be. And as long as we don't talk about it, and as long as we keep on hearing about the Trump administration's bullshit and lies, then, I mean, that's the reality we live in right now. They bullshit, the market takes it for granted, and we expect more money from the Fed in the meantime. So why would we actually try to ruin the party? So it's just like it is. The party is on. It's a very stupid party, but you cannot actually and necessarily stop it. So it's just play along with it or just stay the fuck away. It's as simple as it is. I personally rather like to stay the fuck away rather than actively fighting against it. And therefore, my personal stance still remains the same. Even if I have been proven wrong yesterday, doesn't mean I won't be right a few days from now, but I'm certainly not going to holding bearish positions, losing money. That's not what it is. So yesterday's reinforcing position stopped at break even, obviously, as the market surged at the end of the session. But I still have the major position I have in here, which stop loss is still on top of this area. So my question today is whether or not this position will be taken down. Of course, my Nikkei position is still on track. Actually, I still have this one, so I should still be red. Obviously, Nasdaq has been flushed. DAX is still doing pretty well. I mean, we're far off yesterday's my yesterday entry price. So things are doing fine on some assets. It's just that, once again, the same old guys are not working. I tried on the Nasdaq. It has apparently been a failure. We'll see. It's all about it today. We're still far from making new historical highs on the Nasdaq. So as long as it isn't done, don't consider it granted. I'm just watching what's going to happen today. All right, so let's switch to some more S&P 500 charts, the ones we care about. Out of a daily basis chart, we can see the ugly lower shadow candle we've had, even though this is, and we have broken both the low points and the high points of yesterday's candle, which is not really a fancy type of candle. But we're still below the previous resistance, so same conclusion out there, out of daily charts. As long as this resistance isn't broken, don't considering it granted, even though we have heavy risks of this to happen. If we switch to some lower time frame charts, 4 hour in here, even though we're not going to get to very short-term trades yesterday, and what happened yesterday is massive impacting into the stock indices. Therefore, we really need to zoom out if we want to make sense of what happened. So in here, the thing is that obviously after we tried, bam, ugly bullish engulfing on the 4 hour charts, followed through by the earnings release, but we're back into the trend channel in here. It means we're dealing into the 1 hour context, and therefore this bearish engulfing we had earlier today, don't think it's really that bad. It's actually showing us an appropriate timing in terms of signals. There's nothing, but there's obviously not going to be anything, because this type of price action is just nothing like something you'll be used to see in normal markets. Because if we switch 1 hour chart time frame, you'll definitely see that the price structure is just staggeringly stupid. Once again, expanding wedge, breaking resistance, breaking supports. That's just absolutely stupid. So as long as we're into this structure, and as long as we don't break the previous market top, that means we're in a range. It's a stupidly volatile range, but still a range. And therefore, if you're considering it be bullish or bearish, you're probably just going to be wrong. It's just all about it. We don't have a goddamn clue of where we're actually going, because this is not a typical type of range. It's just pure raw volatility. So VIX is still above 24. The question I'm wondering today, whether or not we're going to manage to slip below. If we do and make new historical highs, my last position will be taken down, and probably I will look for reinforcement slightly later on new areas that I will highlight with the weekly podcast, obviously saving us some time for today. So on a purely intraday manner, the only thing I'm actually going to be doing is looking at the fact that we have range signals, we have range breakout. I think we're going to range this area. If we not go down the road once again, it could be just like yesterday. People tend to believe that there is a trend going on, they actually fail, and anytime we break a resistance, we find some reverse. Just like anytime we try to break a support, we reverse. And that's exactly what I think could actually happen. So if you really think that the bullish side is granted, I think you might be just proven wrong today, just like people might have been yesterday. So it's all about, I don't know what the fuck is going on in here. I'm going to be trading it into lower time frame charts. So my 15-minute chart in here doesn't really give us any reliable thing. Let's just give it a second to plot. All right, so in here, totally rangy, as you can see, very mature ranging structure. Major low point has been in here, which makes it wave 1, 2, 3, 4, 5, 6. So very mature range right now. We're looking at breakouts, which means we're starting to have a look at how the market behaves out of trend channels. Today, first starting point, trend channel has been reacting pretty bullish. Let's see if the momentum has confirmed this with a bullish trending signal, yes or no. Jesus fuck. Come on, TradingView. All right. Yes, we do have trending signals in there. So it is pretty positive for the bulls at that point. They're having bullish trending signal on the trend channels, meaning they're taking the lead on these perspectives. We'll see if they can manage to sustain. For the bears, as long as we maintain prices on top of this, there's nothing you can do about it, but just to let it go. If we actually get below these levels, this is where we start to rise quite some concerns. So yeah, I would say dealing 3-minute time frame charts right now seems the most appropriate thing for intraday traders. So 3 minutes, still having a look at 15 minutes, of course, but these are the appropriated time frames for an intraday trade. I unfortunately won't have time for this today, so I'll leave you guys with these trading scenarios all alone. Once again, a little bit of autonomy can be just great at some point. So trade on your own, be safe, and if you have any doubt, just get into Discord and ask people about what you're doing. It's always better to have someone more experienced than you reviewing what you're doing, because that can only give you two outcomes. The first one is positive. You actually done things real right, and people will say, that's just fine. So congratulations, you can go ahead. Or you're going to learn about a mistake you probably would have made, and it's teaching you something without having the need to make the mistake to be taught. So it's really great. I mean, having some feedback is always positive. Anyway, I cannot invite you more into this Discord. You know about it. It's just free. Just get in here, and as long as you're polite and motivated, you'll be welcome. If you're just there to bullshit or put some commercials or whatever, I mean, you're going to be taken down. That's the usual stuff. But if you have a positive mindset, you're more than welcome. That being said, let's switch to the conclusion. All right, so today, intraday, pure intraday, have a deal with the 15-minute chart time frames. Always make sure you have a look at this one. If a signal shows up, you need to follow 15-minute more than 3 minutes. But at the current given time, and what I have in front of me suggests 3 minutes is a more appropriated time frame for both bulls and bears. Just manage yourself into this time frame. Also in the same time, as long as we deal with the H1 time frame, speculative area closer to this breakout. So of course, if we lift off this area, that means we're trend breakout. And in that perspective, you just forget about selling activity, okay? Selling is only possible as long as we get close to the H1 time frame breakout structure, which is, remember, breakouts are time-limited structure, which means the H1 time frame has a limited time offer. If you want to range this price area, if it lasts long enough, which means if it lasts till the end of the day, we're simply granted to go higher. So it has to be a range. It is a limited time offer, and we have to stick with this price area. If we lift price far upward, that's a risk for breakout, and you definitely don't want to be trying to sell. And in that perspective, if that's what's happening, then just let it go, all right? If you have a bearish bias, let your stop losses being triggered, let the prices rise, and we'll sell with higher prices later. I'll give you some areas to look for by next week throughout the weekend. So that's simple as that. I mean, when you get proven wrong, you don't try to fight back at the market. That's not how it works. So we actually at some point have been proven wrong with the reinforcement position yesterday. Still a little bit too early to say that the overall plan is invalidated. Therefore, stop loss might be at the market top for now. And if they get triggered, just let it go. That's what happened when you just are not in the right move. Not the right move means that you can take either a loss or a stop at break even. In that perspective, I personally will take a tiny loss because I haven't got the perfect price right at the market top. Therefore, being stopped right at the market top is going to cost me something like 0.1% capital. Wow. So that's the thing. I mean, if I'm wrong, I'm wrong. No big deal. I'll get back to it later. That being said, there's no more to say. I wish you guys a good weekend. I'll record the podcast, but probably on Sunday. And on those YouTube podcasts, we'll see each other again on Monday. Bye, guys.